So a lot of you guys have been sending me a lot of messages asking me if I could put together a more complete video about my order block, how I view order blocks. And so that's what I'm going to try to do here. Now, to keep this video short, I would like to just talk about order blocks and how to validate them. How do you kind of know which ones to take and which ones, That's really what I'd like to stick to in this video. I'm going to get to time. There's a lot of cool concepts. There's a lot of cool concepts regarding time, but unfortunately, I don't have enough time to talk about all of them in one video. So there's a couple rules I have for order blocks. My first rule, a swing high or low must have been graded, purged, whatever you want to call it, by the candle you want to be your order block. That's rule one. Rule two, the candle you want to be your order block needs to have its opening price traded above or below. So essentially, we'll get to it, but you have to wait for your order block to get traded above or below. You can't anticipate an order block being an order block until price has told you it's an order block, where the state of delivery had changed, order flow changed. I have a couple notations I'd like to just show you or tell you. These aren't really main rules, but say you're looking to get into a trade. Say there is no swing point, but you kind of know where the draw is, where the price is going to go. For it to be a high probability order block, you need these two rules to be in place. Otherwise, it's more 50-50, maybe less than 50-50, where it might fail more often than not. If there is no swing point, you can still use any up close or down close candles as potential order blocks, as long as the order block you're anticipating takes out the previous candle's high or low, essentially taking out liquidity. So the order block you're anticipating takes out the previous candle's high or low. If rule one doesn't happen and your swing point doesn't get taken, you at least need the candle that you want to be your order block to take out the previous candle's high or low. You need liquidity taken. You cannot use a candle that didn't take liquidity as an order block. They fail all the time. You need displacement. Displacement in many ways shows you the market's hand. So if I have an order block and it creates inefficiencies or FVGs, displaces and shows energy, those are really, really high probability. You pair that up with a candle taking out liquidity, and those order blocks hold all the time. They're very high probability. So order blocks, most sensitive price points of an order block is the opening price and the 50% level. You don't want to see a candle ever close below 50%. So take a picture of this, because I'm going to be moving the chart around and it's going to disappear on us as I move. So obviously this is an ICT concept, but I understand it a little different than I believe how he teaches. This is fractal. This happens on any time frame. You can use what I'm about to share with you on any time frame. So if you understand liquidity or time, this will be a lot easier for you. You'll understand that this isn't cherry picked. You can see this stuff happening in real time. So like when I'm looking for order blocks, I'm always looking for swing points. There needs to be a swing point. So let's just use the really most obvious swing point there is with what's in my view right now. This here is a really obvious swing point. Doesn't really matter which one you pick. Like, you're not wrong if you pick this one. You're not wrong if you pick this one. But if you understand time and objectives and liquidity, you'll really understand with time and experience how to know which levels to pick. Just by using a basic fib level, you'd know, okay, anything under 50% is targets on the way down. It's in a discount. You can go long. I don't want to get sidetracked. Let's just talk about order blocks. Here we have a swing low on a 1 hour chart. And I'd be willing to bet This is probably a swing low even on like a 4-hour chart, just based on market structure. And it is. That's experience. 4-hour charts a swing low. And while I'm here, here's that same swing low on a 1-hour chart, right? What do you notice about this candle that takes that swing low? This candle that takes out that swing low on a 1-hour chart is right here. This down close candle right here is this wick on a 4-hour chart. Your order blocks don't have to be a body. Why do you think ICT says treat wicks like gaps? You can treat them like order blocks. This here is a rejection block. So just understand that a lot of times I'll see a wick, a swing low, and I'll see a wick take out a swing low, and I'll use that wick as my order block. Because on a smaller time frame, it's really just a body. Okay? So a mistake I see a lot of traders make is they'll use an entire range of candles for your order block. Now that's not always wrong, because again, everything's fractal. On some larger time frames, this is probably just a single candle. But you lose precision. It's also more risk. If you want to go short in here, your stop technically has to be above it. So look how much you're risking if you're wrong. If you enter here, your stop loss here, and you're going short. So if you can really find the right candles, the levels are impeccable and super precise. Like some people would probably use this whole range of down close candles because it's a series of down close candles. And I mean, it's not necessarily wrong, so it gives you an entry right here. Trades above it, entry. But if you entered here, your stop would have to technically be right down here. I don't like that. I like precision. So this is my order block. I identify a swing low right here. I then want to see a down close candle trade below it, which it does right here. This single one candle on this time frame is my order block. I'm not using both of these candles. And technically, if you do, you're not wrong. It still gives you entries and blah, blah, blah. But pay attention to the body. See this body here? Closed below 50%, which is this dashed line. I like my 50% levels to hold and to be really clean. And for me, if I was in a long here, and then I seen that, that's enough to make me want to get out and kill the trade. And I would have missed this move. Watch how by just identifying the single candle that trades below a swing point, look how much more precise it is. You take it from the open all the way down to the wick. Look at the bodies. Because what that tells me is price could have closed below there, but it didn't. If it doesn't want to close below that level, then what's it telling you? It's not going lower, it's going to go higher. That's narrative, that's logic, that's reason for price to do something. And then you pair that up with liquidity with a bunch of equal highs. Those are all targets. And if we overshoot those, how high can it go? You have these inefficiencies up here. We'll trade into and rebalance and reprice. How I do my order blocks changed my trading career. I used to hate order blocks. I wanted nothing to do with them because I didn't know how to draw them. I would literally, like I said, take entire ranges, and there's just no precision in here. You know, I mean, I'll show you guys. You can take a range of candles, and it works out sometimes. You know, like that. Yes, it worked out, but it also took out liquidity, took out a swing high. And understand that it's deeper than just looking for the order block. It's understanding balanced price ranges. It went up and then down. There's no reason for price to trade back up into here because that's a balanced price range. But that has nothing to do with order blocks. And if you don't understand what a balanced price range is, then you'll be like, hey, well, look, this order block here worked out. Technically, that's an order block, but the reason why price didn't trade higher into it is because it's also a balanced price range. You're always looking for swing points. And you can really use any swing point. I mean, every order block at some point is essentially respected. You have to know, okay, do I get out or do I hold for the larger run? Most of them will always present you some type of entry and some type of profit. So here we have a swing high right here. This blue candle trades above there. That's the opening price. As soon as that opening price gets traded through, doesn't have to close. This one did close. Doesn't have to do that. But as soon as it gets traded below this this up close candle is now a valid order block. Took out a swing high, price traded through the open, and then it even started displacing. See, it created some displacement, created some inefficiency and some fair value gaps. So technically the order block here, the precise range is from the opening price, not just to the high of that up close candle. I use the entire range. I'll use the highest price of the range, which is right here, this wick on a down close candle. Anywhere in here, you can take an entry to go short. Stop placement's pretty important. Technically, your stop should be above the high of an order block because there's other PD arrays nested inside of the order block that could be above 50% that I might want to try to test. Typically, I have my stop loss above 75% of the range, or 25%, however you draw your fibs. 75% is right there. So I took a short in here. My stop is going to be above 75%, which lines up pretty close to this rejection block. Kill the trade if we get a closure above 50%. So if I'm in short, I get in here. If this blue candle came up and closed above 50%, I'm not waiting for my stop loss to get hit. I'm just going to get out. If it's a high probability order block, in my experience, 50% should never give way with a closure. If it does, it almost always comes up through the order block, through the high of it or low of it, and it'll stop you out. The reason why I have my stop placed at 75% is, again, you see how here price tried to trade through 50% and it did, but then close. You see that wick? See how the wick didn't get to 75%? 75% is kind of like where wicks shouldn't reach. That's why it's a good place to put your stop loss. So if you take an entry in here, it made you money. It dumped, It's a huge move now. It's a crazy move now, but that's money. That's entry up into here, 1985 down to 1885. Man, that's 100 points. So you're like, oh, see, it didn't work or it failed. No, it didn't. It gave you an entry. It respected it until hitting FVG, but we're not talking about FVGs right now. What did it react off of right here? Right here. Why did it just start going higher? Why did this move happen? Look, I see a swing low right there. I see a down close candle right here. Isn't that an order block? I see displacement. Not that we need it. Once we get swing low, that gets taken, and then this candle gets traded above, we don't need displacement. But if there is displacement energy, that's even better. So I'm in this short, right? I get in here. What do you think I'm watching? I'm watching this level right here in my shorts. I'm watching the opening price of this order block. And I'm watching 50% right here. Any type of strong reaction out of this area, I'm killing my trade. I'm taking my profits. I'm at least break even on my trade. I'm not losing. You see this wick here? That's liquidity. That's price taking it. Then it trades away. Once this is taken and if we're going to be bullish, there's no need for price to come back down into here because this is a balanced price range and it also already hunted the stop losses. There's no reason for it to go here if we're bullish. See, how I trade is I scalp. I don't look for one entry and try to hold it all day and blah, 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 blah. I don't do all that. It's very hard to do that. Maybe there'll be a day where I can trade like that, but I can't just find one killer entry, take my trade, and pray to God it plays out. So a lot of times I'll take a trade and I'll be up good money. It's a nice trade. Why the hell do I want to take the chance of it running up against me to where I'm now losing money on a trade I was up a lot on? I'll just scalp. I'll trade ranges back and forth. PD arrays. I'll trade PD array to PD array. And it's easy. So this here is a bearish order block entry. And it trades from a bearish order block to a bullish order block. And hopefully you guys know a little bit about ICT already. Oh, and I made a mistake. Technically, this order block goes to this wick. That's the lowest wick. I use the entire range. Again, say you take a long in here, and you see you have a bullish order block, or a bearish order block right here, and you're long here, long enough of this bullish order block. I'll change the color so we don't get confused. Change it to like a green color. That's bullish. It's the same thing. Price starts trading higher. If I'm in short, what do you think I'm watching? If I didn't take my money here and I'm watching price, seeing how it acts, I'm watching the opening price of this bearish order block. Because if we're real bearish and we're going to dump and go lower, and we were already in this range. Balanced, took out liquidity. There's no reason for price to want to go back up into here after we leave it unless I'm offside and I'm wrong on my trade. See this up close candle here? Where does it close? It closes back inside of this bearish order block. It closed back inside right here. See that close inside of there? Where do you think it's going once it closes inside of that range? It's going at least to 50% of the order block to retest it. So if I have my stop sitting up here somewhere, my stop's probably going to get taken. You need more confirmation, fine. Let's just keep moving this box down. This candle closed inside of the range completely. This next candle closed inside of the range, and it's a down close candle, and it tested the low of this order block, or the opening of the order block, and it actually went outside of it with the wick. Doesn't that mean it didn't want to close outside of it to go lower? That's a signal in price. That's a signature in price. That's why you wait for your candles to close. That's why you wait for candles to form. It didn't want to close outside of that range. What's that mean? Doesn't that logically mean if it doesn't want to close outside of that range, it's probably going to go higher? How high is it going to go? I don't know. But isn't a good target or a low-hanging fruit target for it to go higher at 50%? Yeah. What's this candle do? The next candle trades all the way up and above and through 50%. I mean, I would have got out around here if I was in short. And if I was long, I'm loving this. I'm loving, okay, I got in long here. Now I want to see this candle's open, get traded through and above it did. We're still in there. Now test it. Couldn't close back under it. Great. I love that if I'm in long. Now you just hold and go higher for 50%. Trades through it, closes above it. Where are we probably going? To the high, which we did right here. And before it went there, it retraced all the way almost to 50% to give people late entries. What did it trade into? It traded into this swing point, this wick, which on a much lower time frame is some order block, probably on like a 5-minute chart. Now, there are times you can use up close or down close candles, which is pretty much just reading order flow to tell you where the market's going. Remember, this here was my order block, my bearish order block, right? There's some people, some traders that would view these two up close candles as a bearish order block. And you can see price hit it, respected it nicely. There's nothing wrong with that. Notice it didn't take out a swing point. This up close candle did. Right here, took out that swing point, this candle. Notice how these two candles didn't. There was no swing point in here for them to take. What they did take, though, they still took liquidity. This up close candle took out the previous candle's high right here. This up close candle here took out the previous up close candle's high here. If that's how you guys are doing it, I've just found so much more success and precision with my order blocks using one candle and really just demanding them take out a swing high or swing low. You see, this is just on one time frame, the 1 hour chart. This concept is happening on every time frame. Probably in my next video, I'm going to show you exactly why the opening price in 50% of any order block is sensitive. It's not just because there's a magic level, there's a reason for it that I haven't heard anyone talk about. But through my price study and my experience, I think I'm onto something, and I kind of discovered why. Okay, well, what do you notice about this right here? Isn't that a swing point? Yeah. Isn't this a down close candle that takes out that swing point right here? Yeah. Remember, opening to low, and the low is technically right here. So it's from the opening of this down close candle. Zoom in for you. It's the opening right here of this down close candle, extended all the way through, and then you see this next candle. Its wick is down here. So I'd use that entire range as my order block. And remember, opening of the order block has to get traded through for it to be a valid order block that I can trust. Extend this range out. Look at that. Look at that entry right there. Ain't that crazy? And you see how it tested it, rejected off of it. If you got in and you see that, and ideally your stop loss should be, if you want to be safe, you always put your stop loss at the very low, swing low under the order block. So right here. You're also risking a lot more money when you do that. I'd rather put my stop loss 3/4 away down So not completely at the low, but almost at the low right here. So if I'm in long, stop loss is right here. That should give it enough breathing room to where it can wick through 50%. Closure below 50%, now I'm just killing the trade and I'm getting out. Because I'm probably wrong. You read candles and order flow. This candle traded through it. Closed really bullish and strong. Nice, great. This candle traded higher. Awesome. Wicked. They don't love wicks. This candle took out the previous candle's high. Wicked all the way through. Tested your order block. Rejected it hard. This candle had a chance to close inside of the order block, inside of the range, which would have been a lot more bearish. Not to say this wouldn't have worked out, just would mean that we're probably going lower inside of the order block. If this candle closed inside of there, we're probably going to 50% of it. The fact that that candle couldn't do that, like, stay in your trade. You really need to understand liquidity and targets to know which swing highs and swing lows to pick. Otherwise, you can kind of pick any candle, you know. You understand higher time frame draws, how the higher time frame candles are closing, manipulation legs, all types of stuff. And I already know people are gonna be looking at my lesson, cherry picking different order blocks that didn't work out. Well, how come this one didn't work out? Look, nothing happens all the time. You're not gonna be right all the time. And if you're gonna think that way, and that's your mindset, you're gonna fail. It's about having risk. Why do you think I have my stop loss set certain points in case I'm wrong? There's a swing high right here. Zoom in. That's a swing high. This up close candle traded through that swing high right here. This down close candle traded through the open. That's now a valid bearish order block. That's your entry. My stop would be up here on the rejection block, which is around 75% of the range or 3/4 of the way up. I don't like having my stop loss at the very tip or the very high of the candle because I'm risking a lot more money. If this candle closed above here, I would have killed the trade. Entry, targets, relatively equal lows into this rejection block. But the whole range ended up getting taken out. Swing low, drop from open to wick, entry, relatively equal highs, boom, boom, target. And if you want to hold it, you can hold it. I like taking my easy profits from here, 510-ish to 625-ish, 620. It's over 100 points. Low, high, low. This is a breaker now. This price trades through it. This ain't a lesson on breakers, but breakers are in many ways the same way as an order block. Like if this is a bearish order block, then you know when price climbs above it, it will inverse into a bullish PD array. It should be respected with bullish characteristics. Closed above it, traded back through it, couldn't close below 50%, couldn't even touch the bottom of it. It starts running away. Here it taps in. So I mean, you see how these PD arrays get respected so often. This was a trade I actually took on Friday. If we have a swing high right here, price trades above it. That's my order block, bearish order block, entry, targets down here. You see how this candle, when it came up into it, it just wicked. Couldn't even close inside that range. If this candle here closed inside that range, then we were almost certainly going to 50%. And then if it closed above 50%, it's probably invalidated and we're going higher. So people are like, oh, how can you take that entry, blah, blah, blah. You wait for the candles to close, and it tells you a lot about price. If I was in and I seen this candle close inside that range, believe me, I am ready to kill the trade, exit the trade really quick. So I was in here, trades lower, breaks lower, displaces with energy. This candle here just came up to do rebalance this range of inefficiency. So it's balanced. Price shouldn't trade back up above 50%. Once it does that, price trades back up, then get into 50% of this range. Bodies couldn't even close inside of the FVG right here on the retest, which is another sign for order flow. See the bodies couldn't even close back inside of this range of gap. So if it was really bullish or if it wanted to go higher, it should have closed above here somewhere. Then on the retest, shake traders out, your stop should have still been above your order block, so you were safe. And then these bodies here couldn't close inside of this range, which was already balanced at this point. Starts breaking lower, great. Once you see this candle break like that, this candle kind of becomes a continuation pattern, this up close candle, it is a bearish order block. And so trades lower and trades back up the side here. Use that as your bearish order block to get back in sync with the market or to take another contract to keep trading lower. Stop loss again, above 75% of the range up here somewhere. The reason why that could be used as an order block is because the narrative is coming off of this order block. And we had displacement, breaking structure, breaking swing lows, closing below bullish PD raise on this side. So the narrative is there to want to use this as a bearish order block. Took out liquidity, this candle, with these highs here, this high. All that liquidity was taken, so there's no reason for price to want to trade back through it and above it if this is the target, because it already took out the highs. So that's my video on order blocks. If you learn anything, please subscribe, please follow, please reply if this helps you. I have a lot more to show you guys, so please support me, and I'll help change your life with trading. I love teaching.